Good afternoon, everyone. Well, as we see here, the markets are finally having a pullback of some sort. The leading names of the day have been showing some foot dragging, and a number of these names have gotten clocked over the last few days. This year, that's been the story. When the market pulls back half a percent to 1%, the leading stocks get hit a lot harder, and it scares a lot of people out of their positions, only to see the major averages then find their footing, usually within 5% or less of their peaks, and move on higher. Meanwhile, the leaders that have been clocked have damage that need to be repaired, and so by the time they're back to buying buy points, issuing pocket pivots and whatnot, the major averages are already up probably another few percent. And that's, of course, making this year quite challenging, even more so than prior years, because this kind of action had not been seen in prior years. Prior years, like 2011, we'd seen a lot of choppy, trendless, volatile patterns emerge in the major averages, which, of course, is no friend to any trend follower or one who wants to pivot their position in a leading name. But that said, 2011 and this year had a couple of good, strong trends. And had you caught those trends and added to your position or traded them in some manner, they would make all the difference to your portfolio. And I'm citing silver in 2011 and Tesla this year. And Tesla had a number of buy points on the way up. So, sometimes the markets are so challenging that you just don't want to do a thing, which might be okay as well. But if you can find a way to capitalize really on the position sizing aspect of trading a Tesla or silver 2011, it will make a difference. And the thing is, psychologically, it's easy to get derailed because in a year like this year, many of your names probably are not doing very well, and you're probably getting stopped out of those positions. And so you become conditioned to thinking, well, is there going to be anything out there at all? And I mean, the market usually does give at least one or two, if not a handful or more of names, such as Tesla's, that can be played and profits reap from that kind of market action. QE, we know, is on full bore. The ECB lowered one of their critical interest rates to 0.25%. So the euro went down. The markets in pre-market futures this morning went up, and of course QE on full bore means ultimately that's good for hard assets and stocks. But keep in mind that everyone always wants to know what's going to happen, what's the future. And knowing the future or trying to figure out the future has nothing to do with good trading. Good trading has purely to do with being in the moment, being in the now, and knowing your risk tolerances and acting accordingly to what your portfolio and what the market is presenting to you at that moment. Gil?
Yeah, and the market is presenting to you at this moment a broad range of wonderfully shortable stocks. And so I have to admit I'm having another field day today on the short side. And those of you who've been following me in the chat room, you've seen we've gone after a number of stocks. I think we talked about last week Baidu when it failed on the viable gap up, and it just blown apart. Even Tesla, if I could have borrowed this thing yesterday, which I wasn't able to, I would have considered this a shortable gap down. It's sort of a head and shoulders. I mean, the only thing here is this: if this is a shoulder, and I look at the weekly chart, it's not really that well defined. This might be the break that defines the right shoulder or the head, the right side of the head. So it's kind of, so you get this big ugly head because it's really hard to see on the weekly chart here. Left shoulder, a head, a right shoulder. Yeah, it looks like it. But what I would call this, before anything else, is basically a late stage failed base. If you look at the pattern, we don't get into counting bases, but you probably have your first stage, coming here, second stage here. Flag pattern is a third one maybe, and then you got this other base is trying to form, and by this time you're late. It's pretty obvious. Everybody's in love with the stock, they suck all the lemmings in. And the other thing is you have this pocket pivot here, But keep in mind this pocket pivot occurs before earnings. My position is that you don't want to buy anything in this market ahead of earnings. I mean, okay, I did cheat on one. I owned Taser before it announced earnings, but not a huge position. I think barely even 10%. I got lucky. But for the most part, something. I mean, I think Taser's relatively new, but when you look at something like a Tesla, yeah, everybody knows about it already. When your kids are telling you at school, even the kids are talking about Tesla stock, and you got to buy Tesla stock. Okay, yeah, sure, whatever you say. And I think you could see the rolling sort of top, but I think it's confirmed yesterday. You get a V-shaped pocket pivot, and I don't think in this market environment that's the sort of pocket pivot you want to buy. It can be a constructive sign, I think, but it's the V-shape. We already know this, and we wrote about this in the book. When you have a downtrend, you get a V-shaped pocket pivot. It might be a sign of strength or a sign of the stock is trying to set up, but it probably will back and fill. And usually you'll see a second one. A lot of these roundabout patterns, like in Silica when it was coming around. Yeah, you saw a pocket pivot in here, I think, right here, and then another one. And so you see a series of these as it's setting up. And so the initial one, coming off the bottom or off of a V shape isn't necessarily going to go anywhere. You see the same thing in FB. Facebook, although I think Facebook's toast. I think it's going to break the 50-day moving average. You can see a little teeny tiny mini cup, head and shoulders rather here, left shoulder ahead. Big volume here. It's kind of what it looks like on the weekly chart. That's sort of a very compact head and shoulders formation. I think you could see Facebook top, and right now it's actually breaking. Well, you can see it's breaking the 10-week moving average. And it's just dipping below the 50-day moving average. And again, here you have this pocket pivot, which you could say it's a buy point on the basis of the fact, that it bounces off the 50-day moving averages. And this is the first pullback to the 50-day moving average since the Bible gap up back here in late July. You could say that, but you also have to look at the weekly chart. And really, to me, what it is a second bounce off the 10-week moving average. And so as you progress through these, they have the less chance of working. And so I think, if you're thinking about buying this on this basis, I think you have to let it settle down and go sideways and then see if it forms another pocket pivot, which I would say is possible, but my money right now, I'm short Facebook from the rise this morning on the opening right up into the 20-day and the 10-day moving average. My thinking was that you're going to get a bunch of lemmings who are going to come in and buy Facebook and LinkedIn and on the basis, and even Yelp in the morning on the basis of the Twitter IPO, which is about the most moronic theory for buying a stock I've ever heard. And I guess I'll credit the VOSI community because I think we only got one email from somebody asking if we advise buying the Twitter IPO. It's like if you ask that question, it's clear you have no idea what we're about, because no way in hell would we ever be buying a stock on the first day of the IPO. There's no basis for it. There's no pattern to buy. It's hanging up in the air, and Twitter they don't make any money. It's a great website, I think, and we use it ourselves, for social networking and marketing purposes. We have Twitter pages, and so, it works nicely, but they're not making any money. And, the ones that have done well, Facebook, LinkedIn, they're making some money. Yelp, earning a penny last quarter, but losing, I think, 4 cents this most recent quarter. And it's dying, and Yelp was another one. I don't know, it opened up this morning just a hair, and I guess everybody thinks they're going to buy Yelp and Facebook and LinkedIn and blah, blah, blah. It's it's just such a simplistic theory that you just have to short them on the opening. And so it's busting. Here's Yelp busting the 50-day. Watching Facebook is trying to cling, it's like a man dangling from the 50th story of a building window. And he's just dangling on the 50. I'm guessing it's heading for 45. That's my near-term target on a short. That's a tactical short. Somebody's asking me, is LinkedIn shortable here? Well, if you guys understand how I short, and if you've been on these webinars, you know that we're watching the low here. This is 413. I'm sorry, 213. 413. Yeah, I wish. 213.50. Here's the low. Okay, in early October. You're undercutting that today. Now, you already last week and earlier this week, you undercut the closing lows in early October, and it gets a little bit tricky here because it may have already undercut and rallied. So on a closing basis, and so now you're undercutting this low. My thinking is you're probably headed to the 200-day. If you shorted here, you're probably having to use the high of today at about, what, 221.99 as your stop. But, you know, I thought this, I've been short this for a while and just working a position. I even was long it for a brief period, pumping the rally up to the 10-day, but that gave out and then reverse and go back short. But I stay very flexible here. And on short sale target stocks, I don't even think you need to really study it in detail, because the bottom line is if you look at any pattern of a stock in a severe downtrend, you get these sharp rallies, and sometimes they can be 10% or more. And if you can figure out how to jump on and play those just briefly, maybe for a day, maybe for 2 days, maybe 3 days if you're real lucky, you can make some profits there. And I did make a few bucks on LinkedIn on the bounce coming up back through the 220 area and up into the 10-day, then I go short again. So I'm just flipping it back and forth very rapidly, and it's profitable the whole way. But it's a result of having tried to short into rallies and just keep getting my head banged against the wall instead of understanding that when there's a time when a stock coming down, after coming down, has will have a reflex rally, and those can be sharp enough to get short on, and I'm sorry, or go long rather, and then short once they give way. And the other thing for me is, you guys all know that I'm pretty much a visceral trader. I need to feel what I'm doing here, so it helps. Being long, being short a stock that I'm working on the short side gives me a feel for the supply and demand pressures, that I wouldn't get otherwise just by watching it. Anyways, but if you short it LinkedIn here on the basis of some sort of downside breakout, you can also see here's kind of a rolling head and shoulders top formation. You can see it on the weekly chart. The interesting thing here is the right shoulder is higher than the left shoulder, but that's the same thing that we see in Facebook. If this, I don't know if you call this the right shoulder here, but you can see this variance I've noticed in some of these head and shoulders formations, and some of them are working. So this might be a QE phenomenon where you're going to get a higher, this is where I'm looking at the right shoulder on Facebook being higher, since I kind of call this the right shoulder on the daily chart. And right now, interestingly, I'm in the thick of looking at the short side, because we have completed a detailed outline for the next book, which we're titling, what is it, Dr. Turn to the Dark Side with the O'Neill Disciples. And we got that outline. We're getting ready to actually start writing it. And I'm pretty excited about it, because I like what we've outlined so far and some of the discussions we're going to have, as well as some of the new research regarding shorting that we've been able to produce over the last 3 years since writing the first book, which had a chapter on short selling. Anyways, blah, blah, blah. Let's look at a few questions. UUP, Dr. K, what is causing the dollar rally? Well, the euro falling. Dr. K, you wish to comment on the obvious?
Yeah, when a central bank lowers its rates, it weakens its currency. That's what the ECB did this morning, pre-market. It caused the euro to drop and the dollar to rise, and also futures to rise, because stocks like quantitative easing. They like easy money policies.
Yeah, so but I think the Europeans cutting rates down to 0.25%. Basically, what they're doing is saying, yeah, everything here really sucks. So much for the turnaround in the European eurozone. So the same thing in the U.S. I don't think there's much in the way of a turnaround. I did want to point out, I didn't discuss the indexes, but some of the things I'm seeing here that I haven't liked has been, if you look at here, you have stalling day here on higher volume. Here you have a distribution day that was slightly higher volume. Here's another stalling day on higher volume. Then we come up here. Here's a reversal and a stalling day on slightly higher volume. Here's a reversal and a stalling day on heavy volume. Here's a reversal day here on heavy volume yesterday. And so you got this series of these little reversals, which I think look pretty ugly on the daily chart of the NASDAQ. Now, meanwhile, the S&P has been looking pretty good. Even the Dow, I think, made an all-time high yesterday. Is that right, Dr. K? And
yeah,
I think the S&P was, yeah, the S&P was pushing for an all-time high, and this morning, and it reversed, and now you got a big outside reversal day. What are our volume levels looking at right now?
On the heavy side.
Yeah, up 28.69 on the NYC, and up 11.7. So you're getting some heavy distribution, but I think you could have seen it several days ago in the action of the leaders. You know, and as Dr. K's been saying, you can have the indexes come off 1 or 2%. They don't look so bad, but meanwhile they're pummeling, absolutely pummeling these leaders. You know, the pummel of the day is Solar City, which is gapping down. You know, here again, here's a pocket pivot, but it's a V-shaped pocket pivot. And going into earnings, you really have to think twice and think hard about whether you really want to buy the stock going into earnings. Personally, I don't think it's worth the risk in most cases. If you're going to try a 10% position and you don't mind if the stock blows 20%, you lose 2% net to your portfolio, you can go ahead and do it. I did that with Taser. I just didn't think. I felt Taser was, but you know, it's not like I went and bought a 50% position, which I would normally do if I really had a lot of conviction. But I felt that it was relatively new, setting up in a high tide flag after emerging from the below the 10 zone. And I'm told that most institutional investors can come after a stock when it's above $10. So that's why I keep an eye on this Organovo. But in any case, you know, got lucky here. But if I'm buying along here, say along the 15 area where it's tight and the volume's drying up, and by the end of the or by the end of the day or the next day, it's well above 18, and I'm up 20-something% on the position. In this environment, you guys know I'm going to take it, and that's what I'll do. So in any case, Taser, coming right thing, that it's now violating the Bible gap up. But that's kind of where we're at with this market, because I think you are coming in for more of a correction than you think, or that than we already have. I think you're going to come. You could come down 6, 7, 8%, or maybe, and then maybe you bottom in late November, and then everything turns around. You can get long and make a bunch of money in December. I know IBD telling everybody that this is the last 2 months are typically seasonally favorable for the market, but that's a bunch of bunk. If you look at the last 2 years, 2011 and 2012, November actually wasn't so hot for the market, and then December was sort of a limping around month in both cases. The other thing is you're in the second year of the presidential term cycle, whatever they call it, and that tends to be a weak year. Now, there's been an anomaly this year that the market's been up, but it's possible that we could finish out the year with a nice little sell-off in the markets here. So again, you watch your stocks. You don't operate on the basis of silly bromides, from people who have to sell newspapers and keep you interested. But I think you can be interested enough on the basis of the of making money on the short side. So we'll see how this develops. But go into some more questions. Well, you have a chapter on QE in the new book and how to successfully trade it. I don't really think there's any overriding or overarching method to trading a QE market. I think, as I've discussed many times on these webinars as well as in the chat room, I've taken a short-term view, and I was telling Dr. K this morning, it's really coming into the present and only operating on the basis of what's going on in the present and moving that way with the market and not being bearish or bullish, because based on the ugly duckling theory, which you guys have heard me talk about before, when things look really ugly, right, Dr. K, that's usually when they turn around. So you can operate on that basis.
Through the last couple of years.
Yeah, and so the ugly duckling theory now overrides in the present overrides what I would like to think in terms of a general bear market starting, because whenever I've thought that, I haven't really been right. There have been some nice corrections that you could play on the short side. I'm thinking May 2010 was a beautiful period. I'm watching LinkedIn making new lows, cutting through that 213.50 low, streaking for the lows. You're coming down into some area, but my guess is you're headed for 196. So I may, I don't want to lock myself in here, but I'm trying to hold a core position, which I've been staying with the last couple of days. And if it does break here, I'm thinking we're going to get to 196. I did pretty well shorting Trulia, which is going through the 200-day moving average today. Zillow looks exactly the same, and if you can borrow this one, I think this one's heading for the 200-day. You notice stocks do kind of run in packs here. You see this head and shoulders type of setup. You see the Zillow just starting to set up here, and it may break, looking pretty ugly. It looks like it wants to break to the downside. So, there's a nice group setting up. Again, and I'm looking at Facebook possibly as a short. I'm looking at, if I could borrow Tesla, I would have shorted it yesterday on a shortable gap down type move. and that worked pretty well because you did get an intraday rally right up into the 162 area here, which was resistance, and you could have hit that intraday. So you know, kind of weak. Anyways, let's see. Is there a difference between stalling versus churning in the indexes? Nah, they're kind of two words for the same thing. Wouldn't you say so, Dr. K? I don't. There's not. What's the difference? I mean, stalling could be when the index tries to make a new high and then reverses. There's not a lot of volume. It runs out of gas, like a plane stalling. What do you have to say, Dr. K?
They're synonyms. They're used interchangeably.
Yeah. So, anyways, let's see. Dr. K, were there any Hindenburg omen signals recently? I would say my answer, don't pay attention to them. Dr. K, your answer?
I haven't even bothered looking because we've had a number of Hindenburg signals this year, and you see how the averages have done accordingly.
Yeah. Dr. K, how do you read the volume and recent breakdown in the biotech group? How do you know where profit-taking ends and a group has actually topped?
Well, you look at the leading stocks in that group and see how they do, because that's going to be your beacon. So you want to be looking at the best names, the leaders in your group that have done well, that have shown leadership characteristics. You got REGN, which is breaking below its 50-day. That's not so good. You've got CBST Cubist Pharmaceuticals. It was looking good earlier this year, but it's been sideways, sloppy. Looks like it's going to head south from here. It's under its 50-day. Alkermes ALKS, that looks okay so far. Let's see, Valiant VRX. That's been obeying its 50-day. It's on the verge of violating it, though, if it were to close below its 50-day today, and then trade below the low of its close. So that's a change in weather for VRX because it hadn't violated the 50-day for almost 1 year. Then you got stocks like Celgene that's under its 50-day. You got a lot of damage going on in this group. So I would be wary about putting much money into, certainly the BBH index if you're trying to play the index. But I'd play it on a stock-by-stock basis. You've got ILMN. That's probably looking the best. It had a gap up on strong earnings, and it's pulling back on seemingly lower volume. So just keep it on a stock-by-stock basis, and just know that this group is having some trouble.
Yeah, I don't know. I'm reminded of a movie where there's an old guy in the movie, and he keeps saying the same line over and over again. He's really, really old, and all he says to people when they ask him, "How are you?" and he says, "Time to die." And I'm wondering, looking at these stocks, okay, Illumina's holding up, and what's the other one? Alkermes is holding up. Maybe they're just the next ones to blow. That's the other thing to consider. I personally, if based on the way I would operate in the market, I would, if I were long anything, and I blew everything out long ago, a couple of weeks ago. I'm thinking there might have been a few trades on the long side, that I've executed, but mostly they've been 1 or 2 day trades or even intraday trades. I would take my profits and just kind of hang out and wait for the next buy points to show up if and when they do, and they may, So, and a lot of times, I think what you'll see in the QE market is you'll see these pocket pivots developing, on the basis of the ugly duckling theory and the roundabout formation, so that's your best spot to be coming into some of these, like Silica here. I think SunPower also, it's getting, hit now, but it was coming up and around. So I'd be watching, again, I think I talked about this last week, I'd be watching for these sorts of setups after a correction to start to show up, become a little more preponderant. 5 on the long side if market holds up. What do you mean 5 on the long side? Like you want us to bless a trade on the long side? Yeah, I wouldn't buy this thing here. So, Little Big Man, that's the movie. Thank you for telling us that. It's a good day to die. I think that was it. I don't know. Align had a Bible gap up, but guess what? It doesn't want to go anywhere. So it's just hanging out, forming a flag on the weekly chart, tight closes, maybe it's just going to have to do that for a period of time. But if I had bought this on the basis of the Bible gap up, given the general market action, I'd probably just puke it and kiss it off, and just kind of leave it and push myself further in the cash. It's not doing anything for you, and it doesn't look like it's going to anytime soon. What's your take on this, Dr. K?
Yeah, I mean, it comes down to, of course, time frame and all of that. I mean, not every to be effective in this kind of market, your time frame has to be very, very short, and not everyone has the time or the inclination or the trading personality to do that. In which case, know thyself is very important. So if you're, a longer term guy, intermediate term, and you bought this and you're sitting in it, I would say sell it if it breaks below the low of this tight band. That would be under 55.80, and then otherwise, sit tight with it, because there's really very little risk in holding it where it's at right now if you're going to use that kind of sell stop. And know that the group itself, it's group rank 34, but it's had some weakness. And if you're more of a faster trader, then this thing is potentially dead wood to you right now. So there's nothing wrong with dumping it and waiting for it to set up again.
Yeah, and I would say, if the general market's looking like it's getting into some trouble, and you have bought a stock and you don't have a profit on it, why not just blow it off and wait for something better to come along, rather than sitting there like Humpty Dumpty waiting to take a fall? Because on the face of it today, the action doesn't look very good. Volume is up sharply. You started up on a gap up and you reversed. So not looking too healthy here. So I think you have to heed that. And if you're not making any money on a long position, why not just back away and rethink? So that's what I would do. Let's see. Is MDM close to changing direction or going to cash?
Well, we always, there's really no close or far. I mean, there's never been a way to enhance the returns by knowing if it's going to be close or far away from a signal, just because the market lives to surprise. So the question is kind of there is really no answer to it. An answer that will be constructive and help the returns of the model.
Oh, come on, Dr. K. Can't you tell us how close the model is to changing in qubits?
But I will say this, that obviously it weighs the action of leading stocks, but it also weighs the action of quantitative easing and what it's done for the markets this year. And I see that the Nasdaq's more than 2% off its peak, and it's had a number of these pullbacks this year, which many of them are contained within 3 to 4%. So it's
right.
All this has to be weighed, and also when these leaders get hit as hard as they do, they often don't continue to get hit. They often find their footing, and so that also serves as a support for these major indices.
Somebody asked, when does Netflix turn into a short as a headless horseman? Actually, I've been watching it rally, and I shorted it yesterday on the turn. It had a 620 turn to the downside, made a couple of bucks there, and then I shorted it this morning around 339 and have covered it off the 20-day, waiting to see if it does break the 20-day. So, I mess around with this on the short side, but it's not really anything I can call a shortable pattern. Again, though, maybe there's some sort of a head with a pinhead, head and shoulders with the pinhead formation. That's a pattern I've seen in the past. Frequently, actually, you get a pinhead type of top here, and then it rolls over. So, but in terms of a classic short sale setup, it's really hard to say this thing's going down, get shorted. In a lot of cases, you'll see the market, it'll come off the peak and break down, and when you want to be shorting, is when you're in a bona fide bear market. You're really not there yet. If this was the beginning of a bear market, then this would be your first break off the peak. And usually what will happen is then you'll go sideways. A lot of stocks will break down off their peak with the market, and then the market goes sideways or has a little reaction rally, and these stocks form right shoulders, and then everything rolls over together. If you go and read, I think, Chapter 6 in our first book, Trade Like an O'Neill Disciple, I talk about how that should be synchronized. I also think Dr. K, aren't there some videos of some of the online webinars that we've done for like Traders Planet and eMoney Show and all this other stuff about synchronizing short selling with the market?
Yeah, they should be out there.
So you might look, what would that be, on the media page or something? So
Yeah, 'cause we generally keep that pretty up to date, so you can take a look at the talks we've given for these various platforms
yeah,
in that part of the
so
website.
so I think that's what you're looking at in terms of short sale setup reports. We'll probably, if we progress further into a potential bear market, we would have some of these going. I think Lulu was one that we talked about a while, and it seems to me like it's set up again. And I have to tell you, I hate this stock because I tried shorting this and tried shorting the rally, and they just punished me, and I ended up getting stopped out around the 70 level or so. And then it rallies into new high ground. It looks like it wants to go higher. You even have a pocket pivot here. Look at that. See, a little cup with handle, pocket pivot. But all it really is another right shoulder in a head and shoulders formation. It does break down. Once you break through the 50-day moving average, the thing here, there wasn't heavy volume, but it did break down through both the 50 and the 200. Now today you have a rally up near the 200-day moving average, and it's starting to roll over, but I'd have to say that volume is probably not, let's see, volume is running about 2% above normal for this time of the day, so nothing really special here in terms of the volume, but this might be where it starts to break down. I do think that Lulu is potentially a long-term top in the stock, and I think you could play it on that basis, and it might be profitable if we went into a deeper bear market. So, but to me, it seems like it's setting up as a head and shoulders. But you can see the right shoulders, that they can push you for a while before it really starts to break down. I think maybe that's what you're seeing here, but there isn't any huge volume on the downside. But there, it's the same way there isn't a lot of huge volume on the upside either. So we'll see what side of the equation comes in with any kind of force, whether you see some increased volume selling or not. But this is looking like it might be actionable. I actually do have a little position out on it right now, just testing it out. I don't know. I'm fearful of Lulu because it always screws me up. And I can remember trying to short it back, I don't know, in 2010 or 2011, and it still screwed me up. So some stocks are like that, they're just out to get you. But in any case, we'll see if this one works. I figure if I just do a little position, it won't rally too much on me. It's only if I get in real heavy. Anyways, let's see here. More questions. NUS. Well, I don't know. What are you using for your stop here? Violation of the 10-day? I guess not. I guess you're using the 50-day. But, like I said already, if you got some stocks and you got either profits or you're not really making much on them, you might consider just putting it in the bank. So, but we can't tell you NUS. What should you do with it? I don't know. Maybe it bounces off the 20-day. Maybe not. What are your objectives for the trade? What are you using as a trailing stop? That's what I would say. Gold and silver. There's something going on here. My question is, if QE is so positive for hard assets and stocks, then why, number one, why is the market going down today? And number two, why are gold and silver selling off even after the Fed confirmed that QE is still going to be the order of the day? So there's nothing going on here. You had a flash of brilliance here with this pocket pivot in the SLV. It was not confirmed by the GLD, which might tell you something, and that is when you see a buy point in SLV that isn't soon confirmed or even coincidentally confirmed by the GLD or a move in gold, then maybe that means it's it's not going to happen. But there's nothing going on in those right now. I'm not a buyer. Is Yelp shortable? On terms of what? Well, I talked about it earlier. You're breaking the 50-day moving average, so it's sort of you might consider it a later stage failed base. Here we had the first stage breakout here. And again, I don't count bases. When the stock breaks down and it's had a decent run, here's your first stage breakout, second stage breakout, third stage breakout. I guess you would call this a fourth stage base, and it's breaking down. It may not necessarily bust apart right now, but I thought it's shortable, in the rallies in here, and now it's undercutting all these lows. So, I don't know if you're asking me whether you can short it here and make money in just sort of blind fashion. My first response would be, unless you understand short selling, and unless you have a clear plan for how you're going to handle a short sale position, don't start mucking around with something you don't really have much experience in. If you want to test out small positions so you can learn, that's one thing. But I don't, in my view, you're down 2 days, you're undercutting some lows. I don't think right here is the best spot to be trying to short this turkey. So that's my view. So, but it may set up. I'm keeping an eye on it, and I have tactically shorted it on a day trading basis. But I love this question. If Dr. K can't tell us how close the model is to changing, can he tell us how close he is sitting to the model?
What? In virtual space?
That's a facetious question, and I think that's.
Well, no, that has an obvious answer. The model. I'm not sitting next to the model. The model sits with me. I sit with the model, and it's
right.
We're all one and connected at all times.
It's trapped in your.
No space.
Too funny. Let's see. Okay, what else? Can you cover REGN? We already did. So, V-shaped pocket pivot not working, violating the 50-day moving average. I don't want to own it, so take it from there. And I think in general, you're seeing a lot of stocks just getting pummeled. Let's taking a look at this. Some of this. I'd say most of the stocks on my buy list are getting pummeled. Look at this NSM. Whoops. After earnings, look at that. Is that ugly or what? And again, here's sort of a head and shoulders here with the right shoulder higher than the left shoulder. So maybe telling you that in this environment you might see some patterns that set up like that. OCN was already dying on the vine. This is all pretty interesting, and it's just showing you how these leading stocks are getting crushed. Is anybody dumb enough to buy Twitter on its opening? Where did it open up today, Dr. K? By the way, opened up at
about 80% higher than its listing price.
Right, but what was the opening price?
Something like around high 40s.
45.10, trading at 45.63. My guess is it trades below 40 by the end of the day, and the market blows apart. So that's my call. Anyways, let's see. I think the action looks terrible, and the action in so many leading stocks is just pathetic. And if you think you're going to get long something here, I think you're an idiot. Sorry, you know me, I don't mince words here. AFOP, look at the way these things all. I've even shorted some of these like Sienna and Finisar, all just dying. Finisar hanging in better. It's probably the next one to blow. Taser, is still blowing to the downside, violating the, trying to hold right at the low of the intraday low of the Bible gap up. You got Spewer busting. I'm watching Tesla just continue to make new lows down to 139.99, so it's below 140 now. Solar City looking grim. Blocks, another one. It was trying to hold up along the 20-day, nothing doing. Now we're back to the 50-day. Centaurus, I think they're coming out with earnings today. The stock's slightly down. You had a pocket pivot here, but it's hanging out. But again, this may be a head and shoulders, so I'm not so sure. Depending on the context of the general market, I'm not so sure I'd be wanting to buy any stock right now. Period. Or it could be like Obama. Period means something else. Unless the market turns around and goes up. How's that? Pandora Media had a pocket pivot type move yesterday. Again, V-shaped, failing. So, you don't want to buy this crap. Let's see. Silica, some investments talk about. We already talked about it. But and here's a pocket pivot. That's not so much a V-shape. That's a little better. But, it goes out to new highs. Came out with earnings. I think at best it needs to form a base. It's trying to hang in there. If you own it down here, you have two options. The first is you can sit with it and use a violation of the 50-day. I might be inclined to use a violation of the 20-day myself, but because that's how it tends to hold that. Or you could blow the position out here, take your profit if you bought it lower, and sit around and wait for a new buy point to emerge, because I think you will probably see that at some point. So, a bird in the hand is always worth two in the bush, especially in this market. So, let's see. Someone's saying Cena as a short. Interestingly, that was on my list of short ideas. Again, a little head and shoulders type formation, kind of a late stage pattern, but you know the stock really is just in a giant downtrend, and now it's rolling over again. This kind of looks like a rolling sort of almost, you know, a shoulder here, a head, now a little shoulder, a 2-week shoulder, and breaking down. You know, you're undercutting these lows here, so there's always a possibility that it rallies back up. I prefer to short these things when they rally back up. So, you know, if you're going to short it here, you're already down a good, I don't know, 6-7% from the 50-day moving average, so it's a little risky, but I think you're on the right track, and I just watch this for any kind of rally, maybe up into resistance at 80, you know. So far, you know, that's if you're already short it, you might try cutting some of it at this low. But my guess is if the market's really bad, it is heading for the 200-day. And you know, you got some weakness in these other names like Baidu coming down and violating the 50-day for the first time in a while. You got this YY, which is about the ugliest, most volatile piece of garbage I've ever seen. You got C-Trip getting smashed as well. So, you know, all these Chinese internets are getting pummeled, and Cena's just another one. I bet you NetEase is getting whacked. Yep. And I bet you Sohu's getting whacked. Yep. So, you know, it's all there. Tango had a 5 weeks tight action and then completely blew up. Yeah, which tells you that, you know, if you're going to, well, I don't see 5 weeks tight. Did you say, is that 5 WT? I don't see it. You had a couple of tight closes here on the weekly, but I don't see anything after that. So there was no real not even a 3 weeks tight here. So you better check your chart patterns. But you know, we never liked Tango. I never liked it. It was going up, and then, but what, you know, these thin little stocks, it trades 870,000 shares on a $24 stock up here, and look how fast they just blow these apart. You know, so. You know, the thing people don't ever really want to think about or realize is that the market is risky. The market is a very risky place. And if you use the CAN-SLIM methodology, it's a very high beta methodology. In other words, you can get your head ripped off if you're in the wrong stock at the wrong time, or should I say the right stock at the wrong time. And I think a stock like Tango shows how you can get slammed. And you know, a stock like NSM, you know, shows how you can get slammed. You know, earnings. Tesla shows the same thing. You know, if you're dumb enough to be buying it in a late stage formation when everybody finally loves it, and you sit there going into earnings and you don't sell quickly on the break if you still own it, you know, you're getting pummeled again. And you know, the market has risk in it. And I think where people go wrong too often is they want to believe that there's certain safe stocks, or they can mess around with little tiny thin stocks, and you know, that's a safe way to play it. You always have to be alert, and you always have to be watching where your exit points are. Somebody says, does a head and shoulders pattern show itself in the indexes as well? No, not really. I mean, unless you're looking at this. But you know what? You know, I don't rely on head and shoulders patterns in the indexes at all. Okay, just so you know, I don't need them. Your thoughts on CSTE as a pocket pivot yesterday? Well, if it was a pocket pivot, it was a pocket pivot. I guess that's a pocket pivot. If you want to stick your neck out and buy a stock with the market coming off on heavy volume, you know, go for it. But you know, I'm not interested in buying anything, especially a piece of junk that trades 213,000 shares a day and is thin as hell. So, you know, why mess with that? It's for you and 5 other guys can buy it and maybe push it up again. FNGN, what do you think? I think they suck. That one sucks. Away, you know, I don't know. I'm not going to buy that. Open, another Bible. I'm not really going to buy that. It's failing. I'm like I said, I'm not interested in buying stocks right now. I'm shorting the market. So you ask me what I think. I don't think you need to own any stocks. So. Otherwise, if you see a pocket pivot and you want to buy it, go ahead. You know, keep your stop in there. Don't get lazy, and don't get complacent. Just keep your stop in there and keep yourself out of trouble. But you know, you ask me what I think. Who cares? I don't want to buy anything. ARMH short. Yeah, I think this is a short. It's breaking the 50-day moving average. You can see it is a late stage failed cup with handle. and breaking down today, reversing at the 20-day moving average. Just kind of typical for how these will work. It's you could call it a pod too, punch bowl of death, because it is. They're usually like 21, 28 weeks in duration. So 1, 2, 3, 4, 5, 10, 15, 20. Yeah, it's 23 weeks long, and then boom. So they tend to be pretty quick in terms of straight down, straight up, and then they blow up spectacularly, hopefully. But the thing failed on the breakout, so you try to break out through 50. No go, you reverse on heavy volume, coming in, you bounce along the 50-day, and then it's confirmed by busting the 50-day moving average. You shorted here using, at this point, I guess, the high of the day, which was, 47.71, as your stop, and looking pretty ugly, I'd have to say. So that's actionable, I think. BBY short, I don't know, maybe the market's going to bottom here. Everybody's asking me about shorts now. Well, it's just coming off the peak, so Best Buy, I don't really see anything really to short here just yet. It's sort of in a position where it could jack back up, into the lows of this little teeny flag, which it's a little tiny 3 weeks tight. So much for 3 weeks tight, huh? And it's coming off. So, but why would I wouldn't short that necessarily. I might, maybe I might do it on a tactical basis if I was on it earlier, but I don't think I'd be on it now. Z, I just talked about Z. I think if you're trying to find some support here, if you bounce a little bit, maybe you could short into that. But to me, that's a setup, and could have been shorted this morning. I'm not so sure I'd short it right here. I need to see. I'd like to see a little bounce in it. So the other thing is I can't borrow it. I've been able to borrow Trulia, and that one's worked beautifully. It's now undercutting the 200-day moving average, just blowing to pieces. And that looks pretty grim. So, but I think the group is weak, and now you're looking for sort of rallies to short into at this point. I don't think I'd be chasing them on the downside. I'm not so sure Zillow. It could break down. I think if you shorted it, you're undercutting this low though, so that sets it up for a little bounce to the upside. I'd kind of watch for that, and if it held below the high of today, which is 79.60, I guess that would be a good bounce to short into. But I don't know. It's in this position. You got to be on top of these things when they're happening. But as I said, I'd look for a bounce. Let's see, any other amazing questions? Let's see. Nope. Let's see. I'm looking at nobody's asked about the 3D printers. They've been acting pretty well because there's some news about IBM going to buy 3D systems. I'll believe that when I see it. Stratasys came out with earnings, I guess, and they're up today. X1 is having a little pocket pivot type move here, actually, above the 50-day, but no real follow-through. Looking pretty grim and rolling back. So let's see here. Watching Twitter here, 45.25, so just above its opening price right now. Like I said, I'm looking for it to drop below 40. Fleet, FLT. I don't know. The Bible gap up isn't working, so I don't like it. I'm not buying it. I'm not necessarily going to short it either. LL, it's probably failing. It had a Bible gap up here, but it's not going anywhere. So if you bought that, it's not going anywhere, and you probably should just blow it out and hang back and try something else. It's probably a little bit too obvious now at this point anyways. As a buy, it's probably a later stage pattern, and we'll just have to see how this pans out. But, again, just operate on your rules, and if you have a Bible gap up that doesn't go anywhere, then I think you got to blow it out. Dr. K, how about a signal that tells us when the trendless QE period is over, so some of us non-day traders can go to sleep and stop compounding losses playing nothing?
Yeah, that's a given. We're obviously watching QE like a hawk.
And when it stops and we get into a normal market, we'll definitely know when that happens, right?
There'll be plenty. It'll come in waves. It won't happen overnight. It'll begin with the Fed actually tapering, whenever that is. probably a lot further in the future than people think.
Right.
And then, that tapering will be a gradual process because they don't want to upset the markets, and that'll be a nice little tightrope that they've got to walk.
So it could be
So
years.
we'll know ahead of time. We'll know, it'll be nice when if we come to that day where the Fed doesn't have to do this anymore, and that includes the ECB and the Bank of England, because they're just digging deeper and deeper holes for themselves, the way I see it.
They are, and I personally think that the ECB lowering rates today, they're just saying, yeah, everything over here sucks. So much for the recovery in the Eurozone, and I think the other thing that there's danger of is as they continue, the idea, I guess, is that they can just continue to print money and there will be no consequences. But I think you could create a run on the dollar, you could create a run on some other currency, and this would also result in a sell-off in stocks and general financial crisis. So there's a lot of wild cards that exist. That's why I think you got to stay in the present and watch what's going on. I think that you will have a very nice bear market coming up soon that will be possible to make a fair bit of money on the short side using the market direction model, because I'm pretty sure the market direction model will catch it when it happens. That said, QE will end when QE ends, and you just have to watch the markets. And that's just the way it is, unfortunately. Somebody says, do you ever short a stock based just on the price being extended, like CMG? No, I don't really. It's very rare. Because how do you know when it's extended? Was it extended here, 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 here? Oh, now it's extended and it's coming in to the 10-day. I don't know. It doesn't look like it's extended. Extended from what? From the 10-day, from the 50-day? I don't ever short a stock on that basis. Why do you want to do that? You're trying to outguess the market. And what you need, if you short a stock, you need sellers to continue to push it down. And the first sign that you're going to have sellers on your side helping to push the stock down occurs when you have a massive breakdown off the peak on huge volume, which tells you that the institutional buyers who bought the stock, down in here, as a case maybe with LinkedIn, they're now exiting. And so now you know that you've got a trend working to the downside. You've got institutional money probably coming out of the stock, and that will continue, just like it did with Apple. You didn't need to know when the peak in Apple was coming. As soon as it formed this little head and shoulders, and as soon as it violated the 50-day, had one rally up into the 20-day, it was a short, and that thing was done. So there's no reason that you're going to try and anticipate it up here. Yeah, you might get lucky, but I find that trying to get lucky in the market by moving against the trend or acting in opposite to the trend is not the best way to go. So there's too many. If the market starts to break down, there's too many other things that are going to be in downtrends that are going to work better as short sale targets. Let's see. Blocks on the 50, but volume high. I think, like I said, any long position here is suspect. They're not looking too good. It's also had a decent run. So, first stage, I don't know, a little flag here. Is that the second stage? Third? I don't know. It's getting, in other words, it's getting pretty obvious. Gil, can we have a true bear market with QE in place? Yeah, I think so. I think there's. Remember that I think it was late 2007 or mid 2008. The Fed started to lower interest rates, and then the market blew completely apart in September, October of 2008, even in the face of the Fed lowering rates. So there was a point at that time where Fed policy was ineffective in propping up asset prices. Could that happen again in the face of all this QE? Yeah, I think it could. And so I think you can get a very nice bear market that you can play, and there will be stocks to be short. I mean, I think over the last couple of years, Apple was a great short that we called. Netflix even was a great short back in here that we called. Green Mountain Coffee was a great short back here that we called, and so they're going to be there when they show up, and we'll be looking for them. You may have something like LinkedIn is starting to get into a position where you're going to bounce off the 200-day and then set up in a longer-term shortable pattern. But I think it is playable, and I've only been willing to talk about short sale stuff on these webinars because I can get into some detail about it. Anyways. Dr. K, could QE money actually appear on the short side rather than the long side and exacerbate a correction or bear market?
QE money? What do you mean by QE money on the short side?
I think, well, the way I would look at that is what you're really saying is that all the QE that's gone into stocks suddenly has to reverse course. that could happen. I mean, what if they start tapering? You know, that might be a
Well, yeah,
sign.
that's the effect of higher interest rates.
Right, and so yeah, I guess you could get it. That's I mean, but that's the essence of shorting, anyways. Is that the money going into stocks on the way up now starts to exit. Institutions that bought stocks and owned them for 2 or 3 years during a bull cycle now find themselves in a position where they're cutting the stocks out and blowing the positions out. So you know, in the same way that any money flows to the upside can cause a bull market, they can be reversing to the other side. They can easily cause a bear market and a sell-off. So the answer to that, I guess, is yes. But not, you know, not like QE itself. Like they're going to print money to short stocks. You know, I don't know. Maybe the Fed would try something like that. I have no idea. But anyways, any other questions here? You know, I think the bottom line is you're in a cautionary position here with the market, and I don't think you want to be buying stocks. You want to be looking at possibly taking some profits and being a little bit cautious here. You know, if you got a huge profit cushion on something, then you can probably try and sit and just see how bad things get. My guess is you could, you know, either if you're not starting a all-out bear market, then I think there is potential for a sharp correction in November, followed by a bottoming process, you know, later in the month, and maybe a turn into December where the market maybe limps higher, much as it has done in the last 2 years. So I think you know, that's one scenario I'm looking at. So, but right now I'm just going with what I'm seeing, which is a bunch of leaders getting their heads ripped off, and that's pretty much it. Perhaps this is the Twitter top similar to the BX IPO in late 2007. Well, maybe. I mean, if people are buying this stock, it's up 20 points off the offering price. It speaks to some of the speculative fever in the market, I suppose, and you could look at it that way, sure. Somebody says, well, here's one for you, Dr. K. Won't a dollar collapse, should that happen, force the Fed's hand to end QE? In other words, if the dollar's collapsing, they're going to have to do something to prop it, and wouldn't that entail ending QE to save the dollar?
Well, generally, history shows that when a central bank has printed way too much and causes inflation, and thus interest rates rise, and then the interest burden on the amount of debt, the huge amount of debt that they've created, is often the last straw that breaks the camel's back. So, you know, by then it's probably too late. I mean, the Fed could certainly say, okay, we're going to stop the printing presses, but they're sitting on a massive amount of debt that's been printed already. The interest rates are higher. Question of how high. Inflation is higher. Bonds, the U.S. Treasuries get downgraded again for a second time. And there's a lot of nasty things that can occur in a chain reaction fashion. And we're headed in that direction. That's the problem with all this money that's been printed up to now.
Yeah, so I'm just noticing a couple things. You know, if you're late to the shorting game, you got to be careful. You know, and like I was saying, a lot of people all of a sudden want to ask me if this is or that is shortable. We talked about LinkedIn on the webinar last week, and here it is, undercutting this low. So, you know, if you're late here, you always could get a reflex rally, depending on what the general market does, that'll push you out. And so you got to be careful. You have to anticipate these and be shorting. Better to short into rallies, into resistance, rather than trying to come after them after the fact. So, and be careful about you know, greed. When you see something blowing to the downside, and you think you're going to jump on, that may be right at the point where the thing hasn't moved to the upside. Somebody says, Dr. K, some analysts look at risks of deflation lately. Could we have rising interest rates and deflation? Stagflation, in other words.
Yeah, sure. I mean, you could have the 70s all over again. You know, higher and higher interest rates with very poor growth, or recession, say recessionary. So you're not even having growth, and that's also viable. That's a possible scenario that could emerge.
Yeah, so it's a possibility. Why can't the U.S. government sell some of its oil to pay our debt? I don't know. I guess they could, but do you think this administration is going to be inclined to do something that intelligent? I don't know. Anyway, it's 9 o'clock. That's really all I have. I think you got to be cautious here. If we start to see things that we think are actionable on the long side, and I would say that that's not going to happen for a little bit here. I think this thing needs to settle down a little bit. To me, caution should reign, and we'll look around and see if there's anything on the short side. You probably want to be on the chat room. I usually show up there about 8:30, and talking about anything that might be actionable. I know we were talking about Baidu that one day last week, after it reversed, and that's turned into a pretty decent little short there. Anyways, that's all we've got for now, you guys. Somebody's asking about MU. I don't know, nothing really here that I'm interested in. Like I said, I'm not buying stocks, so I'm not going to tell anyone to buy anything here either. So, anyways, that's it, you guys.
It had a bit of a gap down after the earnings, so that, it's a defective pattern.
Yeah, and I know some of the semiconductors have been leading. They're trying to rally and trying to be one of the leading groups, but I don't know. For all I know, these are just dogs barking. So, anyways, that's all we got, guys. Thanks for showing up again. I think you have a pretty good idea where we stand, and we'll talk to you next time.
So long, everyone.